we're told? That is the main question. Hello Adrian, and welcome back to my channel. It is, yes, 7:30 p.m. UTC plus 8, and it's another episode of the Dang Oracle. First of all, welcome everybody who is watching around the world. And yeah, I think we have quite a lot to be going through for today because, of course, like yesterday, I was too excited to go immediately into the technical analysis, and I felt a little bit rushed yesterday as well because of little Dan crying and so on and so on. So I felt that I rushed it a little bit as well, but yeah. Sorry about that, and we forgot about the news and stuff like that. So we'll jump into it and do everything today instead of yesterday. But first, hello to Darren, Monkol, Hicham, Henry, Gil, Aldrich, Tina, the second Henry, and Lex. Hi Cedric. Hi Cedric. Yeah. I think you will get some cheap Bitcoin soon. That is, oh, too much sounds. Let's remove the sounds first. Okay, but before we go into any technical analysis, let's take a look at some COVID numbers while the hardcore crew is streaming in and jumping in. Right. So, hi Eldrick. Hi Zaldi. So yeah, United States, we are at close to 2.6 million cases. Brazil, it's close to 1.5 million cases right now. So it's going insanely fast in Brazil right now. Russia over 600,000. India over 500,000 right now. Hi Clancy. Boom, boom. Let's take a look on the chart. How does it look on the chart? We are at 10.3 million cases worldwide, and of course USA, look at that chart, not good at all. Brazil definitely not good at all. Russia not good. India not good. Peru not good, and Chile not good. So in terms of everything, in terms of the COVID situation, as you can see, yeah, sadly enough, it's not that great so far. Hi Constant. Good morning to you. Good evening to myself. It's really funny when people from around the world, you know, it's such a different time zone. It's quite interesting. Hi Joe, hope you're doing well as well for this evening. Well, evening for me. Let's go into some news first because, yeah, like yesterday, we forgot to go into things. And the first news, actually, first is not the news. Actually, it's quite important. Zilong, 1 second. And of course somebody is disturbing me immediately, so I have to ban this Zilong guy first before everything else. You see, everything I have to do myself and personally, so yeah, that's the reason why things go so slow and stuff like that, right? So yeah, anyways, ignore that Zilong guy. I'll be banning him in a while. But yeah, anyways, something very important first as we've been discussing about the money printing a lot now, and although of course there's a lot of information around about the money printing, most of the times I feel it's not complete. And I've read this thread from Connor Brown, and I think he's I mean, how he is explained things is quite good. So I just wanted to go over things so that you guys are also very aware that, you know, this money printing is not just, you know, throwing money out on the market that the FED is doing. So as you can see here, let's go over it. Hi Jonathan. We'll go to a Bitcoin analysis in a while I go over this first. This is more this is quite important actually for the economy. So as you can see, money printer is going brr, is a great meme, but I think there's a lot of misconceptions about the Federal Reserve and its ability to print money. While the FED is certainly distorting price discovery, it is not yet dumping large amounts of money directly into the market. So let's start with quantitative easing. Quantitative easing increases the monetary base, but that money does not turn into actual deposits. It stays at reserves. And I think that's where quite a lot of people don't see the difference, right? That it actually is increasing the monetary base, but it's a reserve. It's not a deposit. So this is why the base has increased dramatically while the M2 has grown at a relatively constant pace. As you can see here on the chart. Hi Nikolai, hi Alvin. As you can see on the chart, the bank reserves are going up like crazy, but the M2 is growing. Of course, it's growing. Of course, but it's not growing as quickly as the bank reserves. So you can think of quantitative easing as hyper-specific manipulation of interest rates, not new money in the broader economy. But by moving rates lower, people are more willing to borrow, new credit demand, new loans, refinancing, increase in M2 and money in the economy. So basically, the printing is giving a bigger reserve of liquidity and bigger reserve of money, and that money can actually be used by the people, right? So basically, the printing is one thing, but the printing is actually an increase in the reserves and the manipulation of the interest rate. So this is why many Austrians incorrectly predicted the hyperinflation in 08. The FED is causing money printing, but in a roundabout and less potent way through incentivizing more debt by lowering borrowing costs. Rates are lowered, people refinance, and the cycle continues. And that's basically what the whole purpose is of the lowering of the interest rate, right? They want to keep lowering, so it makes it cheaper for people to be borrowing money, to be getting loans out, to be taking mortgages, to be taking car loans and so on, and or student loans. Why? Because with that loan at a very cheap rate, they can spend it. So basically, that's the whole purpose of lowering the interest rate. So they want people to be spending because, yes, as you know, if nobody is spending in this economy, the money doesn't circulate, and then we will have a major hyperinflation of the money. So a large point of confusion for people is that while quantitative easing increases reserves in the system, banks can't lend reserves. The fractional reserve banking model died a long time ago. Today, creating a new loan conjures new money out of thin air. What's interesting to note here is that increased indebtedness has diminishing marginal returns. As we are already in debt up to our eyeballs, lowering interest rates even further becomes less and less effective at creating new loans. We already have too many. So yeah, at one point, when the interest rates are already at a very, 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 very low, sorry to hear that, Constant, but I'm pretty sure that's just a coincidence. Or well, sometimes, well, you also have to remember a clock can always be right twice a day, right? Anyways, so lowering the interest rate does help, obviously, at one point, but at a certain point, it's already so low that, of course, the effect is less and less, right? So if, for example, if you lower the interest rate and it was 10% and it becomes 8%, that effect is going to be more substantial than, for example, right now when we are lowering from 2% to like 0%. The marginal effect is less because we already have so much existing debt or existing loans as well already, right? So in the past, we already have increased amount of loans, and now by lowering the interest, not everybody is going to be getting more and more loans, right? So that's what he's saying. By lowering interest rates, it becomes just a less and less effective method of pushing people towards lending. So more and more debts becomes a snake eating its own tail. As debt increases, there are fewer and fewer productive places to park capital. Malinvestment grows and fundamentals become more shaky. Hence, we've seen market drifts higher for a decade as large amounts of stock buybacks occur with cheap debt. And I think that's a very key point here. So the reason why the stocks are actually going up is for one of these is for this reason. So it's just a byproduct, right? So it's important to recognize that stocks go up is a byproduct of Fed intervention, but very different from direct money printing causing it, right? So there's quite a substantial difference. So this also explains why the FED is so adamant about how much money they are printing. They are trying to do everything they can to convince the market, and especially retail traders, that the FED is omnipotent and has the markets back. Thus, the recent rally is a funny one. It's not from the FED printing like crazy, but from the FED convincing traders they are printing like crazy. This is key. This rally is not evidence of how directly powerful the FED is, but how well retail was convinced to buy the dip. Despite adding trillions in repo swap lines and temporary credit facilities, none of that is propping up the S&P, and none of it is hitting the broader economy. As of now, it is only to manipulate credit spreads and currency squeezes. The Federal Reserve's signaling they are printing as fast as possible seems like they are panicking and trying to buy the market time more than anything else. The current rally will probably end like Japan in the 90s rather than Venezuela. And I think that's a huge difference as well. As you know, in Venezuela, we got the hyperinflation. And in Japan, basically, it's a country that is still ongoing with negative interest rates, and that's still ongoing right now. So I think that's the big key difference right now. So for all the people who are thinking like, well, with all this money printing, the economy is going to be collapsing immediately or anything like that. That's one of the reasons that most likely that will not just happen. So for other people who are thinking like, well, Bitcoin is going to the moon immediately because we are going to have hyperinflation, blah, blah, blah. Sorry to disappoint you, but that's not really what is happening right now, even though the FED is printing or doing this manipulation. But there is at the one point now they are at zero. The effect of lowering interest rates becomes less and less and less. So there is a danger, because we are like, at one point the you can go lower, right? Well, you can go lower, can go negative rates, but then after that there's no return, or there's no way back anymore if the people are not reacting upon it, right? So however, this will likely change in the coming years. You'll notice M2 has grown dramatically in the past few months. This is from new government debt, because new spending projects are effectively loans. This is real money printing. As you can see, M2 is headed straight up. As the pain from real deflation, for example, unemployment, bankruptcy spreads, there will be a stronger and stronger calls to ease the pain through inflation. We're seeing the beginnings with temporary UBI and PPP, but this will likely grow in size and scope. Ultimately, we may see a complete revision of the Federal Reserve Act so that it can legally direct print money into the economy. Politicians love to earn votes with promising something or for nothing. This is when we really need to be concerned about inflation. So when you hear that they want to change the Federal Act, that's when you should be starting to be really, really concerned. That's my current take on where things stand. Deflation in the short term, big time inflation in the future, and 3, protect yourself with Bitcoin. Well, of course, this is a Bitcoin enthusiast, so he believes that Bitcoin is the thing that can save. But like I've explained also before already, I'm pretty confident we will see deflation first, and it will take still a very long time before we see like inflation. And then when inflation happens, we really have no idea how Bitcoin is going to be reacting upon the situation, because we have to be very honest and realistic here. During the crash, during the COVID virus crash, people did not immediately go into Bitcoin. Right? Bitcoin was not suddenly a hedge or something like that. It did exactly the same as the stock market. So it's definitely not a hedge. So yeah, we will see if Bitcoin will become a hedge if we get into the inflation level. But like I said, for people who are thinking like we're gonna go to the moon in like a year or in a few months, and when things are crashing, we are going to the moon. I'm sorry to disappoint you. I think a lot of misconceptions are having about concerning the printing or the manipulation of what the FED is doing right now. It has an effect, but it's actually because of that, because of retail being stuck, nothing else to do, getting liquidity, and that's the reason why actually the stocks went up. Not really because the FED is printing the money. So I think that was a very important thread and you can check it out. So it's on the Twitter. His name is Connor Brown at Connor Brown. So yeah, you can check it out if you are interested in joining the discussion on that Twitter thread. Hi Sabri, I'm very well today. Hi Fardeen. Hi, thanks Alto. And we'll be going into a technical analysis in a while, but I wanted to show this thread first and go into some quick news, because yesterday we did not go into some news. And this is an article about how nearly 1.1 million Corona reverse relief payments, about 1.4, imagine, 1.4 billion. 1.4 billion went to dead people. So so just so you know, yeah, a lot of the relief payments went to dead people, 1.4 billion people, and yeah. And the funny thing is, if you read the article, at the end of the article, they are saying the Treasury is saying, if you have a incorrect, if you received an incorrect check, please return it to the IRS. Like, I mean, that's like, imagine if you receive a check of like $1,200 in your mailbox. Are you sure you're gonna just send it back? I doubt it, right? I doubt it. Anyways, that was a pretty funny article, and you can see how much how unprepared we are, right? It's like, to be honest, if we had a blockchain system, and that's not because I am a fan of the blockchain technology. Of course, I am a fan. But imagine if you had digital money, and you can just send the money on a digital through a smart contract or something like that. Spread out the digital money in one click, and send it out to 1 million people. How amazing would that be, right? How amazing would that be? So yeah, it's just crazy that yeah, I think at one point it will happen, right? This is about Latin America. Yeah, Latin America is so they changed the prediction of Latin America. It's going to be turning into the worst recession in a half a century. So plunging a third of the population into poverty. So I mean, can you just imagine? 1/3 of the whole population will be turned into poverty. Yeah, as you can see here, the economy will contract by 9.4% in 2020. It's just yeah, it's just so crazy. Like, imagine like 1/3 of your whole country that is turning into poverty. Like, just reading stuff like this is just, it's just insane. It's just so crazy. It's so crazy. Because as you can see here, many of them rely on jobs in the informal sector, tourism industry, and so on and so on. And because of the shutdown, they have created there's no demand anymore for Latin America's exports, and decimating remittances. Region economic recovery could take many years. It's just crazy. It's very, very crazy. Laxman want to hear about the news about Wirecard. Sure. Here we go. Wirecard had a problem, just a small accounting problem. Suddenly a few million a few billion not million, sorry. So 2.2 billion was gone. So imagine, yeah, it was, we can't find it, we can't trace it. $2.2 billion, we can't trace it. We don't know where it is. Wirecard is a payment processor, by the way. A lot of companies also in the crypto are using it to give out the so-called Visa card, to people who have crypto, and then they can use a Wirecard to get cash out of their ATM, basically to spend their crypto, which is still something that it's crazy nowadays, right? I mean, it's still so hard to be spending crypto right now. First of all, I mean, I really hope that some real solution is going to be happening, and not like some third party in between that is just basically fucking up everything. So yeah, but yeah, so there was 2.2 billion missing, and yeah, and the CEO stepped down. from Wirecard. Well, if I was the CEO, I would step down as well. uh, anyways, some good news about Thailand. As you can see here, Thailand is free from local COVID-19 cases for a month. And yeah, Thailand for me has a very special place in my heart because I lived in Thailand for a very long time while I was playing poker online poker over there. So yeah, I'm pretty happy to hear that about Thailand. Of course, we never really know if it's really true or not, because yeah, the government can can do a lot of bad things, right? Anyways, this is about oil. Not really interesting, but for the people who are interested in oil, we can see that Saudi Arabia gross demand will shrink by 6.8% this year. So because of the lockdown, of course, nobody's buying oil, nobody's using oil. So yeah, for countries that are relying on oil, very big issue and very big problem as well. Anyways, so just wanted to talk about we're talking about the Nasdaq and stock market. Let's go to the S&P, right? So I'll put it on the weekly chart first. Oh, not on the weekly chart, sorry, on the daily chart. So we can see here on the daily chart we have been going down a little bit since we reached that top over there since the 8th of June, right? And where can we see some correlation? So where can we see that, you know, is there a reason why we are getting this small pullback? Is suddenly the retail buyers not buying anymore, or what is the issue? Well, one explanation, I'm not saying that is the explanation, but it looks very correlated. We can see that here. This is the Federal Reserve total assets, as you can see here. And what do we see if we zoom in? So of course, the FED has been buying a ton of assets on a daily basis, billions and billions of dollars, as you know. And as you can see here, since June 10, it started to go down, the total assets, as you can see from the FED, right? So June 10, let's go back into our S&P. 9th of June. Is that correlation? I don't know. Maybe. Is that a coincidence? I don't know. Maybe. But I'm just saying, so when the FED is starting to lower the purchases in assets and total assets, so buying less bonds, buying less stocks, buying less blah, 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 everything that they're doing, when they're lowering their assets, the S&P goes down as well. Interesting. Do you think that is interesting? I think that's interesting. So yeah. Anyways, just something that I noticed and I've been taking notice of is since that we are seeing that the total assets have been diminishing from the FED. We also see that the stock markets is taking a little bit of a breakdown as well. And the question is, of course, the big question is, of course, is the FED going to keep buying, or is this the start of a little is this the start of a little downtrend, and the FED is going to be purchasing less and less and less assets? That's the main question. So if the FED keeps on buying a ton of assets and keeps on going, of course, most likely the stock market is going to keep going up. If we are seeing less and less and of millions of US dollars going into the being purchased by the FED, then most likely the stock market is going to be not sustainable and going down as well. At least that's what we are seeing. Fardeen, when do I think is the time is good? I have a perfect video for you, and you can see it in my video section, and it's called, what is it called? I have no idea what it's called. Yeah, it's like, I think it's like the featured video. The featured video, watch it. When should I be investing using the Metcalfe law? Just watch that one video and that's it. That's all you need to know. So, I made that video specifically for you because that's the biggest question that I'm getting from most people, right? So when to invest in Bitcoin using Metcalfe's law, just check out that video in the video section. Okay. let's go into our Bitcoin analysis, right? So tomorrow is obviously, yeah. Let's go on our chart, on our daily chart first. Okay, so where were we yesterday? Yesterday, well, we said that it's still holding this trend here. It's still holding this. It's grinding on the lower end of the channel. We had during the weekend we had a push towards the downside here. We had that, but it bounced off the EMA 100, but it did create a lower low. Something that is very important. We did create a lower low, but we did. I did say that most likely after the weekend opens, we should get a push towards the upside rather than the downside first, right? So that's what we're seeing right now, and we pushed all the way up. And actually, yesterday we pushed up all the way to the EMA 55, which is where I actually started. I told you guys that I will be starting to short also on my swing trading account, because that's what swing trading is about. I do believe that we will have a big drop. I mean, at least that's in the higher probability for me in the near future rather than the downside. So we've talked about this before. When we have a death cross here, as you can see here, when you have a death cross, usually what happens is we do retest either the EMA 55 or the EMA 200. So there's still a chance, a probability that I'm seeing that we can still go towards that 9.3K. But for me, it's starting to become less and less of a probability, because, well, if you can see right now, after we have made that cross towards the death cross, we can see that the distance between here, those two moving averages, are diverging further and further away from each other. That means that there's more and more bearish pressure upon this of this formation as well. Currently on the 4-hour, and you can see that what I've drawn already, this is some sort of like a rising wedge that we are seeing right now. So typically a rising wedge will be breaking towards the downside rather than the upside. So I do believe that most likely later tonight or something like that, we will be seeing some action, and we'll be breaking down most likely from this rising wedge in the short term. And actually, that breaking of that rising wedge is going to be the key catalyst of what will happen tomorrow because of the monthly close, right? So let's go into the highest time frame first, because tomorrow is going to be a very, very important day. It's the monthly close of basically everything. Monthly close for the Bitcoin, monthly close for the stock market as well, right? So for the traditional markets. So let's go into Bitcoin on the monthly chart first, because that's what we're looking at, right? So what we've been seeing right now is, of course, we are building this doji candle on the monthly, right? So a doji candle is basically indecisiveness. That's basically what the doji candle is. So it's quite clear. The next month is going to be either, starting tomorrow, is going to be either moving more towards the upside or more moving towards the downside. So what are we looking for? Well, first of all, this is the Stokes right now. If we are breaking the price, Stokes are going to be curling towards the downside rather than the upside, right? If tomorrow we get a good monthly close, and then the Stokes will keep on going towards the upside, that means most likely next month, probably a bullish month as well, or a continuation of the trend. As you can see right now on the RSI, I think the RSI tells all. You can see here that the RSI is currently curling down, but it has not crossed the EMA 21 just yet. And where does it cross the EMA 21? You can see here at 9,033. We are around $100 away from it. So let me try to explain this, right? So if the monthly closes below 9,033, we will have a bearish, well, it's not a bearish cross, but we will have a cross down towards the EMA 21. The EMA, that will most likely make that the Stokes here will curl towards the downside, and that also will make the next monthly candle most likely go towards the downside rather than the upside. So tomorrow morning, that is basically the key point, right? Tomorrow morning, if we want to have a bullish monthly close, we just need to have the price be above 9,033. So that's on the monthly candle, right? So just put that number into your mind, 9,033. if we close the monthly candle below that, yeah, that's most likely not very good. The problem is, like I said, if we are looking right now at the structure that we are forming, it is a rising wedge that usually breaks towards the downside, right? Usually it breaks towards the downside. And if we break towards the downside, let's say we break until this area here, somewhere around, let's say 8,950, then tomorrow that will create a bad monthly close, if you understand what I mean. But if we manage to hold this price and we don't break down from this structure right here, right now, then of course it is it could be potentially a good monthly close as well, right? So those are basically the things that I'm looking at. So another thing that we're looking at on the monthly is, of course, what I've told you guys before already is this one on the monthly. Here, this is the accumulation and distribution with markers chart. And as you can see right now, we can see a slope towards the upside. I don't care about the numbers. I don't care about the colors. I don't care about anything. I just care about the slope. I want to see with the next monthly close, we will either see this slope continue towards the upside. That would be very bullish. We can see the slope going back down towards the downside or towards the sideways, towards the right hand side. That would be not good. So it's a very simple indicator as well, because I want to know, is this distribution or accumulation? What do I mean with accumulation or distribution? Well, we've talked about that for a really long time already. It's this whole structure here. It's this whole structure here. So we went, as you can see, we went in the reversal, we went up, and then we basically did this whole structure here. Is this accumulation? If this is accumulation of everything, then we have continuation towards the upside and the next month. If this is distribution, then of course we will get continuation to the downside. So for us, it's very important to be knowing if this whole structure that we have been building these 2 months, is it accumulation or is it distribution? And that's what that indicator is going to be telling us. And by looking at the slope, if it goes down, you kind of know that it's the beginning of distribution, because we had this long period of potential accumulation or towards the upside or towards the downside. So that's basically what I'm looking at on the monthly. So tomorrow, those are the two key things that I'm looking at. And then of course, I'm still watching this. Do we get a bullish cross, yes or no, between the EMA 21 and the simple 50 moving average? And as you can see right now, 8,635 versus 8,639, still no cross confirmed. So I'm very curious if we will get a bullish cross, yes or no. But this is only by next week, so we kind of will know a lot more by tomorrow already, right? So but those are the things that I'm looking at for the monthly close, right? For the weekly, we are currently on the Stokes, we are currently looking, it's looking like this. Once again, if we get a crash towards the downside, then of course the Stokes are going to be curling towards the downside. And as well as here, you can clearly see here as well, Stokes are going to be curling down below 9,070. So then it would be, once again, this structure. Then this structure would be a double top on the RSI. And then this is a downwards channel. And then we will go back into our bearish territory and create that, that dump towards the downside, right? Let's go onto the 3-day. The 3-day is still 2 days to go, but nothing changed on that area. On the 2-day, the 2-day and the 1-day is going to be closing tomorrow at the same day as well. And as you can see here, right here, it is already two times. Well, we closed here and then we had 2 times already below the EMA 21. And as you can see also right now here, the 10 simple moving average is wanting to cross downwards and pushing the price down below the EMA 21 as well. Right now it's 9,342 versus 9,265. So as long as the price stays below that, then of course we will have that cross towards the downside as well. So yeah, but nothing changed. Basically everything is pretty much the same on that area. But I just wanted to show you guys, those are the things that I'll be looking at immediately. That's the first thing I'm going to be looking at tomorrow when I wake up to see what the monthly close will tell me. But like I said, I am in a short on my day trading position. I am in a short on my swing position, because for me this looks like distribution rather than accumulation. But we are not done yet. We are not done yet. We still have more information that we can go on. And actually today I've been working on my week of theory. 1 second. Where is my week? Oh yeah, just wanted to show you guys this as well. The MACD, we have talked about that. It's still under the it's still below under the zero line. So yeah, it's still negative in the bearish territory. Just want to show the Hertz cycle. The Hertz cycle, as you can see, also below the yellow line, below the yellow line, and in the bearish territory still, as you can see. So not good as well. And something that that you can see on the medium cycle bottom right now is at 8,377. So that's kind of like a target that we are looking at, right? So around the 8,500 ish area. Maybe it can wick down a little bit to the lower end, or eventually get towards the lower end there after a while. But anyways, I've been working on my week of theory, and this is basically what I've come up with. So for the week of theory fans, this is actually so I've redone everything, and this is actually looking way more like a distribution schematic number 1 rather than anything else, right? So if we can look, this is the distribution schematic number 1, psi, BC, so UT, UTAD, LPSI. So as you can see right now here, I think that so before I thought we were still in our phase C, but actually if we are moving our timeline a little bit to the left, we can see that actually this 10,400 that we have, it was actually our UTAT already. And if you see here, between our BC and our UTAT, we actually had bearish divergence, and that is, you can see it here on the RSI. We made a higher high while the RSI made a lower high. And if you go to our cheat sheet, you can see it here. When the price is making higher high and the RSI is making a lower high, we have bearish regular the divergence. So basically this is the divergence that we've made, and this is actually currently the whole the bearish divergence that is being worked out. And that's basically what I think is happening right now. Also, if we are looking at the volume signature, we can clearly see here demand is higher than supply here, because as you can see here, volume is taking a big step towards the upside, and where we are right now in the supply is lower than the demand, because here, as you can see, the volume is catering down lower and lower and lower and lower. And if you can see right now here, I'm expecting, this is basically what I'm expecting. We had our LPSI here, and most likely we'll get our SO maybe later tonight, maybe tomorrow, who knows, our SO, and then our LPSI, and then most likely go all the way back into our phase E. And actually we can use some magic like this to show you it even more clearer. I think that we will be doing something like this. So this is some prophecy shit, like this, and then most likely from a UT to our SO, something like this. Ta-da! And this is basically what I'm expecting. So you can see here, and that would be end of July. Yeah, that's kind of what I'm expecting. So end of July, somewhere like that, most likely we'll be seeing around that 7.5k ish area that I'm expecting. So that's the reason why I am thinking that yeah, I'm taking a swing trade, because most likely it's going to take a month and more than a month or something like that. So that's my swing trade, and that's basically what I'm expecting right now. And currently I'm just waiting for the drop towards the 8.5k, 8.6k in that green box, and that's what I'm expecting. But for people who are asking me like, okay, well, where do you think that that I'm going to be seeing that? You can do it here, Nikolai. Here, it's called bars pattern. Yes. and then you can just basically copy the segment of the part. And then, as you can see, that's basically what I'm expecting. And we can see that there is a bearish divergence as well, right? Maybe go back into our weekly chart. For the people who don't know, I've already pointed that out as well. We have bearish divergence on the weekly chart confirmed now. As you can see here, we have a higher high on the price. You can see it better when I zoom it in. As you can see, we have a higher high right now, and then on the RSI, at that point we have a lower high, as you can see here, this part here, right? So yeah, weekly bearish divergence we have. Weekly bearish divergence. It looks like things are rolling over with the 2-day, everything, the 2-day, the 3-day starting to go below the EMA, closing candles below the EMA 21. The stocks are curling towards the downside. Yep, that's basically all the analysis that I'm thinking and so far, and that's the reason why I am more inclined towards the downside. A small pullback towards the 7.5k ish area is what I'm expecting, and then we will just reanalyze things if we get there, right? It's not a guarantee, but that's what trading is all about, right? It's not a guarantee at all. You take the risk and you have risk management. Things can, I mean, I could be completely wrong, and then price pumps up and and then I'm wrong. I mean, and then I'll be losing money. That's basically the punishment, right, for a trader. When you're wrong, you get punished. But that's basically what I'm seeing right now. And where is my risk management? Well, for me, the risk management is quite clear as well. We have our, like I said, we have our def cross here. This is our def cross, right? And then, like I said, it can go either towards the EMA 55 for a retest or the EMA 200 for a retest. So if the price would be breaking the EMA 200, that's my stop loss or my closing position right there. Will I be making a little bit of loss? Yeah, because I ended my short at 9,300, and right now the EMA 200 is 9,301. I'll be making minus $5 spread loss or something like that. That's the penalty that I'm going to get, basically, if I'm wrong. So yeah, although my bias is just towards the downside, like I said, it's more important to be thinking about like, okay, well, what if you're wrong, so that you don't lose all your money and that you can hop on the next possible trade. That's way more important than anything else, to be honest. But so right now, this is what I'm seeing. I see a rising wedge, and it looks like it wants to be breaking towards the downside, as you can see, out of that wedge towards the downside. And what we can see as well is on the 4-hour chart, let's go into momentum indicators. As you can see here, momentum on the 4-hour chart is going down towards the downside on the Stokes, as you can see. So not good. HVP flashing on the 4-hour, you know what that means. So we will have some action most likely in the very near future, and with this curling towards the downside, of course I am inclined to be taking it towards the downside rather than the upside. As you can see right now here, RSI is going to be crossing down. It's still above the EMA right now, but it will be crossing down very soon, 9,124. So yeah, looks pretty soon. Let's take a look on expected moves. Expected moves, first standard deviation to the top side is 9,243. First standard deviation towards the downside is 9,026. And here is what is important. 9,000 to 9,025 or 26 is below the monthly. Remember that number from the RSI, 9,033. Yes, it is below that 9,033, and right now, as you can see, it is angling towards the downside. So the probabilities that in the next 12 hours that we are going to be closing towards the downside is higher than towards the upside. So there, math is agreeing with me as well. Anyways, HVP on the 12-hour, yes, it keeps on flashing. God damn it, that HVP, it keeps on flashing. And we are also very similar, very near towards the downside. Let's take a look on the daily. Daily is we're here. Yeah, like I said, we are still being supported, but the question is, do we break towards the downside? Yes or no? HVP is insanely low on the daily, but that has been for fucking 2 weeks already, so I'm not gonna go over that once again. So yeah, that's basically what I'm expecting, and that's basically what I'm seeing. And then this measured move is going to be playing out, and we'll be going towards this green box towards the downside here, most likely. But first, of course, this green box here, make a bounce, this green box then make a bounce, and this green box here most likely at the end of the month, according to the week of theory, right? According to the week of theory, that will be our end scenario. Something else, of course, we can clearly see here on the daily, the pattern that I've drawn, we have like some sort of like a descending triangle that is broken towards the downside. We have that retest of that the top of the triangle, and then it's curling towards the downside once again. Also on the RSI, on the 4-hour chart, if we are looking at the points of resistance and support, here we have support, we have support, we have support, we broke, and then we tested resistance, went down, tested resistance, went up, tested resistance, and now it is going down once again. That is not the sign of a healthy movement of an RSI as well. So yeah, I think I covered everything that I wanted to cover. It's quite a lot, I think. So maybe for people who are a little bit confused and want to rewatch everything, that's why there's the replay for. But I think I've gone through a lot for today, and yeah, those are the key things that I'm looking at. I do think that we will be closing somewhere below the 9K, and that is basically the first domino stone that is going to be trickling everything towards the downside rather than the upside. Could I be wrong? Of course I can be wrong, but that's why you have stop losses, and that's why you have difference in you change your position in trading. So short term, yes, breaking down most likely from this rising wedge. That's what I'm looking at, breaking down from this rising wedge. Something that you should be looking at as well is here. This is actually a really good indication as well. Remember a couple of I think in the morning we could clearly see that this red line, the 10 simple moving average, was nearing and wanting to cross the EMA 21, or this yellow line, and now as you can see it's getting really near, but it's getting rejected right now, well, sort of rejected, and that will give you a lot of indication as well if we are going to be breaking down from this rising wedge, yes or no. So yeah, two things that I'm seeing, or that is possibly to happen. Most likely I think it will be breaking down from the rising wedge, but rising wedges can be breaking up as well. It happened before already, one time already, when we thought that was going to be breaking towards the downside, but probabilities obviously are higher towards the downside rather than the upside. The thing is, if this breaks towards the downside, we will most likely get not a positive monthly close of the candle. It's not going to be a positive monthly close that will get the Stokes towards curling towards the downside. That will make the RSI curl towards the downside, and then that pressure from the weekly is going to be affected, and then all the rest of the smaller time frames are going to be affected as well. So yeah, whew, that's quite a lot. That's quite a lot. Yeah, but yeah, other than that, did I forget something in my week of theory? Let's see. No. Oh yeah, one more thing that I wanted to show you guys is the volume. That is also very interesting. So we've been talking about the volume already for a while. It was since if we make a nice. Here, as you can see, volume has been going down all the way, and what happens is, well, when we get towards the end of this, let's say, triangle, usually 70 to 75%, we get, of course, that spike up out of that triangle. Once again, it does not tell you which direction. Of course, it can be a massive red candle, red spike towards the upside. Then, of course, that's a bearish volume. It can be that's selling volume. It can be buying volume. But we are very mature, and as you can see here, yeah, most likely in the next couple of days, right? Could be later tonight. I don't think it's later tonight. Could be next week, most likely next week. Most likely somewhere next week. But like I said, the biggest domino stone is the monthly close tomorrow. All eyes on the monthly close. That will be the huge factor in everything. And we will see something. We will see a little bit of a hint already in the next couple of 4 to 8, 16 hours, blah blah blah, and so on, because that will be the driving key before the monthly close, right? So yeah, let's wait and see. But tomorrow is going to be a very, I think, a pretty interesting stream once again. But I've gone over quite a lot. So for people who I understand this is quite a lot, so please rewatch the video. If you have any more questions or anything like that, you can always ask me tomorrow. I can go over things once again, or things that you're unclear about. But yeah, it was quite a lot. And then yeah, I hope to see you guys once again. Same time, same place. Please like, share, comment, blah blah blah, and so on. 7:30 p.m. UTC +8. And until tomorrow, of course, stay safe, stay home, stay safe, and of course, stay COVID free.